Let me start with something simple. Gold is trading around $4,200 to over $4,300. That number alone already tells you something is going on. Gold does not move like this for no reason. It doesn't suddenly wake up and decide to go vertical. When gold moves this fast, it's usually reacting to stress somewhere else in the system, and that's exactly what's happening right now. People often think gold goes up because people are greedy, but that's not how gold works. Stocks go up when people are optimistic. Gold goes up when people are nervous. Gold moves when trust starts to crack. So the real question is not, why is gold going up? The real question is, what are people worried about? To understand why everyone is suddenly buying gold again, you have to stop looking at charts and start looking at behavior. Not just retail investors, but governments, central banks, and entire countries. Gold is not a trendy asset. It's old. It doesn't produce anything. It doesn't pay interest. And that's exactly why it matters when it starts moving like this. Gold is what people buy when they don't fully trust the system anymore. There are three simple forces behind what's happening, and none of them are complicated. The first one is uncertainty. The world feels unstable. Geopolitical conflict, trade tensions, rising debt, political pressure on central banks. This kind of environment makes people uncomfortable. And when people feel uncomfortable, they look for protection, not growth. Gold has always performed well in periods like this, not because it's magical, but because it sits outside the system. The second force is inflation and interest rates. Gold is often called an inflation hedge, but that sounds more technical than it needs to be. All it really means is this: when money slowly loses value, people look for things that don't. Recently, the message from central banks has shifted. The fight against inflation is no longer the only priority. Protecting jobs and avoiding economic pain now matters more. That usually means more money in the system and lower real interest rates over time. When that happens, gold becomes more attractive. You could see it clearly. As soon as that message became obvious, gold started moving faster. But the third reason is the most important one, and it has nothing to do with charts or short-term price action. It has to do with geopolitics and trust. When Russia invaded Ukraine, something happened that quietly changed the global financial system. The United States and the European Union froze Russia's dollar reserves and foreign assets. In simple terms, Russia lost access to its own money. That moment sent a shock through every central bank in the world, because the message was clear. If your reserves are held in dollars and you end up on the wrong side of U.S. politics, that money can be frozen. It doesn't matter how big you are. It doesn't matter how long you've played by the rules. Once that realization set in, behavior started to change. Central banks all over the world began buying gold. Not once, not as a headline trade, but consistently, month after month. Countries like China, India, Brazil, Japan, and even Europe started adding gold to their reserves. And the key point is this: they kept buying regardless of the price. That steady buying matters more than any short-term speculation. Over time, this trend has grown so large that something historic happened. Gold recently overtook U.S. Treasuries as the largest reserve asset held by central banks. For decades, U.S. government bonds were the backbone of global reserves. Since the 1990s, treasuries dominated. Now that dominance is slowly fading. Why? Because holding treasuries gives the United States power, and because holding treasuries helps fund U.S. overspending. When America prints money, part of that inflation is exported to the rest of the world through the dollar system. Other countries are starting to push back against that reality. This is not about loving gold. It's about reducing dependence on the dollar. Trust is the key word here, or rather, the slow loss of trust. Many countries no longer fully trust the dollar-based system, not because there is a perfect alternative, but because the risks are becoming too obvious to ignore. The Chinese currency is not a true replacement because of capital controls. Europe doesn't offer a single unified safe asset with global reach. So when trust weakens and there is no clear alternative, gold becomes the default option. Gold is how countries say, we want something no one else controls. China plays a major role in this shift. China has a strong incentive to reduce U.S. financial influence. The dollar is one of America's most powerful tools. China is also the largest producer and consumer of gold in the world. Over time, China has been buying fewer U.S. treasuries and more gold. They are slowly decoupling. Politics has accelerated this process. Sanctions, trade wars, pressure on central banks, and political interference have all sped things up. What used to take decades is now happening in years. All of this explains why gold is where it is today. But now comes the uncomfortable part. Even when the long-term reasons for owning gold still exist, short-term moves can go too far. When gold moves from boring to exciting, that's when risk increases. When you see regular people rushing to buy gold and governments warning against speculation, that usually signals emotion. And emotion often shows up near peaks. It's also unusual to see gold rising this fast while stock markets are near all-time highs. That combination suggests stress beneath the surface. It tells you something is off in the system. Gold can fall just as fast as it rises. If there is a major peace deal between Russia and Ukraine, gold could pull back. If geopolitical tensions cool down, gold could pull back. If trade conflicts ease, gold could pull back. And if the central bank suddenly commits to keeping interest rates high, gold could drop sharply in a very short time. Gold is not a one-way trade. If inflation stabilizes and trust in the system improves, gold loses its reason to shine. That's why gold is never about excitement. It's about caution. So the real truth is this. People are buying gold again not because they expect explosive growth. They're buying it because they're uneasy. Uneasy about inflation, about politics, about debt, and about the stability of the system itself. Gold is not a bet on progress. Gold is a bet on uncertainty. And when you understand that, the move to $4,200 to $4,300 suddenly makes a lot more sense.